One of the first things people say when they hear about day trading is, "Oh, trading is too risky," or "Trading is basically like gambling." Here is the truth. It's all about risk versus reward. This should be the main thing you get out of this video. The two things that are obvious are that people don't really understand the function of money, and secondly, they have emotional barriers to money itself. We have been brainwashed for so long to think that the safest way to build wealth is by saving our money in the bank instead of investing it. The bad news is that inflation will erode your savings, so the safest way to hedge your money against inflation is by investing it. The bigger issue is that we make the wrong career and financial decisions in life and never actually sit down and accurately calculate the real risk versus reward of what we are doing. This is so evident and apparent in the epidemic of college kids in the US taking on huge debts to acquire worthless degrees for a job market that cannot pay them enough to cover those debts. The entire generation has dismissed all the right ways of making good financial decisions in life and accepted a flawed popular belief. The outcome is a workforce of people trapped and frustrated, looking for a way out. So trading just becomes one of the things that people latch on to. The reality is, there are 1,000 ways to get rich, and trading is not the only answer to people's financial problems. The answer is to fix the fundamentals that lead to poor financial and career decisions. The second big idea is that risk is subjective and not two-dimensional. Ultimately, people look at it the wrong way, in the two-dimensional traditional way, which is, the more risk I take, the more potential reward or loss I can face. When in the real world, risk is subjective to each individual's personal situation. Let's say you have a 9-to-5 job, earning $50,000 a year, and you want to quit with limited risk. Typically, you will line up another job before you quit, and possibly even secure a small bump in salary. Let's look at another scenario where you just quit that same job with nothing else lined up. The question now becomes, what is the likelihood of you earning more than $50,000 per year in the future? When you accurately calculate the downside and upside, things become pretty clear. On the downside, you could make less, but your maximum loss is always going to be around $50,000 per year because people tend to anchor themselves to a salary range. On the upside, you can make an infinite amount of money day trading full time. So when calculated correctly, the upside far outweighs the downside. To succeed in trading, you absolutely have to trade with the odds in your favor over and over again with limited risk per trade. All trading platforms allow you to set stop losses to ensure you only lose a fraction of your overall account per trade. I want to recommend two best-selling books by Robert Kiyosaki, Rich Dad, Poor Dad, and Rich Dad's Guide to Investing: What the Rich Invest in That the Poor and Middle Class Do Not.